All right, well, let's kick this off. So, Larry, thank you. Welcome. I've known you for a long time. You helped me build my career. I'm very thankful for all the experiences we've had together. So, starting off, there's two lessons that I remember you always used to tell me for tech entrepreneurship. One of which is survive and advance, and the other
Hmm.
one is it's always better to have a thing. So, those are
Yeah.
phrases you repeated a lot. I'm sure we'll come up with more that I'm not remembering
Yeah.
right now. But
Yeah.
could you
Mhm.
maybe talk about your experience as an entrepreneur briefly, and then we'll go into some of the stories that can
Sure.
highlight why those lessons are things that you want to teach others?
Yeah, sure. I'm done. Thanks. First of all, it's great to be here chatting with you. I've always enjoyed working with you, and I feel like I've learned a lot as well. So I think it's been really a two-way street. Um, and so just by way of background, I was trained as an attorney, and I practiced law in a corporate and tax law setting at a big law firm in Philadelphia for about 10 years prior to becoming an entrepreneur. And it was really the kind of the birth of the commercial internet in the late 90s that prompted me to make a switch. And I ended up partnering with a co-founder whose name is Rick or Richard Thompson. And we co-founded a company called Flycast, which was the earliest ad network. So it was a banner ad network, sort of a direct response kind of a model based on um, bid ask kind of pricing. It was an early use of auction pricing for ad spots, much the same way a lot of the internet works now. And so we launched that in the late 90s and raised money and ultimately took it public in early 2000. And then the company was acquired in 2000 as well. So that was my first real entrepreneurial experience. It was great to be part of kind of the early, birth of the internet. And it was a very exciting time. A lot of ideas. I remember us kind of counting down in the early days to when will when will the internet advertising market cross the $1 billion annual run rate kind of market, size, and being very excited about it getting, and we had all these predictions as to when that might happen. And I think I saw recently that um, Alphabet's, latest quarter was, I don't know, their annual run rate is how many hundreds of millions or billions. It's just so, been really interesting to see the growth, obviously exponentially of that industry and be part of it from the early days. But yeah, that was my first experience, and I've been involved in a couple of other ventures since, as a co-founder or early investor, and I love the startup world.
What was the How did you come up with the idea for Flycast, the programmatic ads?
So at the time that we were coming up with ideas or something to do on the internet, advertising was the really driving business model. And there was starting to be sort of centralized ad serving as a proposition, as one of the key kind of architectural pieces of that. But they were fixed price, and so it was much like traditional media where there was a rate card, and and then the ads were served centrally. Um, but nobody was taking advantage of the fact that websites are uh, are a great fit for variable pricing because traffic is somewhat unpredictable, and therefore it makes sense to sort of use almost surge pricing at times, or discounting when you need, when you have more traffic but you haven't sold the advertising yet for it. So it made a lot of sense to have a more of an auction based model, and that's what we built. And so early on, it was a tough sell because it wasn't the way advertisers were really used to buying media for the most part. So it was a little bit of a challenge. And most of the early customers on the buy side, on the advertisers, were early venture funded e-commerce and other Web 1 companies that wanted to do customer acquisition cost effectively. So that was really the genesis of it. It was and it was again on the publisher side, on the sell side, it was a bit of a challenge to sell because they were concerned about things like diluting their brand and having a channel where their advertisers could buy the same thing at a reduced price that they could buy from their sales force and things like that. So it took a little while to figure that model out, and it evolved over years. But I think I think with Flagcast was the first kind of survive and advance experience that I had, where we had a couple of points where survival was not necessarily certain. And just kind of being able to hang in there and continue allowed us to figure some things out, and allowed us to understand the market more, and allowed the market to come to us a little bit too, in terms of, again, our pricing model and our the way we did business, which was a little unique. So I think I see that again and again. It's really hard to get the pricing. It's really hard to get the timing exactly right. So very often it's about, can you survive? Can you survive through different economic cycles and financing cycles, and continue to understand customer needs and really build for those, and really find product market fit, and then ultimately scale.
I remember you telling me, I think it was your Series A, you had a 4x liquidation preference, something along those lines, where you kind of got bullied around.
Yeah, it was yeah. So we raised our Series A when we were a little bit off cycle in terms of the capital markets view of the potential for online advertising. There had been some failures, early failures in the market. I mean, there were some successes too, but some of the venture-backed companies pursuing online advertising opportunities had failed, and so there was a pullback, I'd say, and we were raising money during that period. So we ended up, yeah, I think the preference was like 8x. It was pretty punishing at the time, but it was the deal we had.
How
Surviving
long?
advance.
How long before going public is that deal signed?
Roughly 4 years.
So great example of survive and advance there, where it might not have seemed like it was going to be a success, and it was.
Yeah, I mean, there were a lot of moments like that where some we struggled with raising money, or we struggled with some of the basic assumptions of the business, and then kind of how to build it. I will say, I guess another lesson is these, if you're in the right market, if it's a high growth market, and and there is starting to be some real value for the customers and for the participants, and that's growing quickly, it's very forgiving. So you can, and then it is really about, can you survive, and can you be present as it starts to really manifest. And so I think picking the right market opportunity is really a huge piece as well.
Yeah, that was a good point. Another lesson you always used to say is that the most important job of the founder is to pick the right market, and that's really done early on.
Yeah.
So, well, out of curiosity, so DoubleClick was your biggest rival back then as far as programmatic ads. Google ended up buying DoubleClick, and now Google's whole system, as you mentioned earlier, is doing billions of dollars and runs on programmatic ads.
Yeah.
Were they doing programmatic ads at all back then? Experimenting maybe, but was it really just you and DoubleClick that were coming up with this idea, or did Google already have that when they acquired them?
Yeah, it's such a really interesting question. It turns out that there was a rival search engine. I believe the name of it was Overture. I may have that wrong. It begins with the letter O. Let's call it Overture. I think that's the name. And Overture used an auction kind of a method for selling keywords. Now, what it didn't do, I'm sorry, Overture did not take into account the click-through rate the way Google did when it implemented an auction method, but so Google did it in a more sophisticated way. But Overture basically auctioned off, and the founder of Overture had approached us, Rick and I, early on, to talk, because it was an incubator that had many other companies, and a lot of them were using Flycast. And we offered to actually build it. We said, why don't we'd use our bidding algorithm to build a keyword auction system for them. And he went and built it himself. So that was that. But right before Google went public, I believe Overture filed a patent claim that they were violating the patent that Overture held on auction-based pricing for keywords. And Google ended up settling by giving them equity. And of course they did very well with that. So there was a parallel path, I think, of keyword bidding. And then there was, banner ad bidding. And of course, with the DoubleClick acquisition that came together, Google owned both. And interestingly, that's one of the core parts of the Justice Department's antitrust claim for breaking the company up potentially.
Do you have an opinion on that, if you believe they're a monopoly?
Yeah, I won't comment on that.
Okay,
it's a complex question. I think there's some compelling claims.
Yeah.
But ultimately, it's really, I think it's a complex question. I don't know enough.
I don't know how far along it is, but I read today Japan is thinking about making Apple and Google allow third-party app stores on their app store, and then also being able to have companies use their own payment system. So it'll be pretty interesting to see what happens with big tech over the decade.
It will.
Yeah,
I agree.
Do you have another example where things were going wrong you could speak to within Flycast that you overcame?
That's a good question. And there were a lot. I mean, we had to make personnel changes frequently. Sometimes we made poor hires, or no, I wouldn't say poor hires that just didn't fit for whatever reason. Maybe it was us, maybe it was the candidate. I don't know, but and I think one lesson early on was if there isn't a fit, to move quickly to rectify it and make a change, and so move on from a candidate that's not working, or a hire that's not working, if and be generous in doing that, in terms of severance, or allowing that individual to hang on to some equity or whatever it might be, but to be decisive. Yeah. If it wasn't working out, it rarely turned around, in my experience. I don't mean if somebody on their first day had a rough day and you talk to them and they, but if after 90 days somebody isn't really clicking, it's probably not a fit. That was the experience, I think. And the quicker you recognize that and then take action, I think the better.
And formally, there was 2 co-founders, or did you have 3?
Yeah, we had at different points a couple of other. I feel like the early, like Peter Best, like the first drummer with the Beatles, and everyone remembers from go. There was also a technology co-founder who ended up not sticking around, and then another co-founder who was helpful. I guess he wasn't really co-founder, but it was really 2 of us.
Yeah. Do you look for 2 co-founders when you're investing, or do you not have a preference on people?
Yeah, that's a great question. I'm working with a couple of startups now where there's a sole co-founder, and I think there's advantages and disadvantages. For the most part, I think probably two is better in most cases, especially if they're complementary. So a prototypical or archetypical, I get, is a product person and a technology person. Um, so I'd say one can work, two can work, three. If you get more than four, it starts to get tricky.
Mhm.
It's a lot of people early on, I think, to have an idea and think about it. Um, but yeah, two's maybe the ideal number in most cases.
And what's the dynamic like between you and Rick as far as operating skill sets?
Um, yeah, so I would say it evolved with time, but Rick had a lot of experience with building early stage companies. I had less so. Um, Rick's he's a strong operator, very intuitive sense of the market, very data driven, quick study, um, very good at hiring and a sense of how to inspire people and get them to do really their best work. I'd say my strengths probably those days were more like communicating the proposition to some extent. Um, so yeah, there was definitely some overlap and there were some missing pieces, I'd say, in the team in that combination, but not too many. We had enough.
Obviously, but yeah, neither
Yeah.
one of you were technical, so you definitely needed that third person in the room at some point.
Yeah, I mean, Rick had come up as a coder, so and apparently a brilliant one. So he was pretty technical, but he had moved on from that, I think, at that point in his career and wanted a broader, kind of a role. But it certainly helped having a founder who was technical-ish. And I think that helped a lot. And so I think I found that I enjoyed product. I had never done it before really, but the idea of sitting down and thinking about what a user really wanted to do, what's the job to be done, and how to think about a product sequentially, in terms of MVP and then beyond. We didn't call it that then, but I think that was something that I really enjoy, still enjoy today.
Yeah, you do have a great mind for product because you're always thinking from the end user's perspective. That's another key thing I learned from you. Like
Mm-hmm.
your first question is always, what's the perspective of the person using the product?
Yeah.
When
Yeah.
DoubleClick got bought, were you public at that point, or had you not gone public yet?
Wait, I'm sorry. What's the question?
When DoubleClick got acquired, were you already public?
So DoubleClick was acquired twice. I think by that time we had already been acquired, and then DoubleClick was acquired first of all by a private equity firm
Mm-hmm.
that operated it for a number of years, and then sold it to then Google, now Alphabet. Yeah, so I don't remember the timing exactly
And
of
what
when.
happened with Flycast? Were you acquired by a PE firm when you were public?
Flycast was acquired in a roll up. There was a dot-com company that owned a number of other internet, Web one brands that was doing a roll up, and it was for a period of time a real darling of Wall Street, and they acquired Flycast as well, and so Flycast became part of this. I'm going to say roll up or conglomerate. I guess you call it a roll up, and that failed spectacularly in the dot-com crash. So there was actually some interest in selling the original Flycast business back to Rick and I, which in hindsight probably would have been a good deal, but we didn't end up doing it.
What happened then? Did it go out of business eventually, or did it get acquired by someone else?
No, it just went out of business, went dark.
What's that like for you at that time? Like, are you sad about it because you came up with the idea, or are
Yeah.
you happy because of the exit?
I mean, both, right? I was happy with the exit, but there was something, what's the word? Yeah, there was something about it when I remember. I mean, very few of the people that I originally knew were still there. You know, they'd done layoff after layoff, or people left or whatever. So it was a little bit anticlimactic, but yeah, it was definitely a thing. It was like the end of an era.
Mhm.
So yeah, felt that.
You don't have
Um,
many, I mean, that's not a failure by any means, but you don't really have many failures in your track record of entrepreneurship, I wouldn't say. Maybe
you know, I
angel investing, the natural
Yeah, I've
position.
had some. I mean, certainly some of the angel deals have not worked out, and I did at one point try to be an operator and do. This was around 2010,
Mhm.
and I wanted to work on a early like video project. So online video, not too unlike some of the things that we saw years later, beginning in like 2018, 2019, in terms of things like TikTok and the like. So user generated, consumer generated video content, and we were just too early.
Mhm.
We were just too early for the market, and so I I did work with some folks to try to launch something, and we did launch it, and we got some. Like there was some signal of interest and demand, but it just wasn't enough and sustained enough to be able to really build something. So I spent probably about 9 months on that or so, maybe just under a year, and then abandoned it because we just couldn't get enough traction. And I think it was an idea that later in time would have worked better, but we were just a bit too early.
It's at a bit of a contrast to the advice of survive and advance to stop it after 9 months. With the last business I did, TO, I felt like I probably held on longer than I should have because I don't think there was really a market there. So for you, what was the difference between stopping something after 9 months and then accepting, a 7x liquidation preference on Flycast and going forward with that?
Yeah. Well, a great question. And I don't know that there was any set rule for really anything in startup world about when do you step on the gas, when do you pull back, when do you keep slugging through, when do you say I've had enough
Mm-hmm.
and the market's not there. Um, Usually if there's something that's going up and to the right, if you will, that's a signal maybe to keep hanging in there and find a way to survive.
Hmm.
And if there isn't, maybe that's a signal that you're in the wrong market, you're too early, you don't have product market fit, something just isn't right. And so I think in the case of Flycast, what we were seeing, even with our challenges to raise funding, we were seeing every week we were getting more publishers lining up to join. And it was more challenging getting advertisers to spend money, but we were seeing that starting to happen, I think, with more regularity. And so it felt like this was a business worth pursuing because something was clicking.
Mm-hmm.
Not all of it by any means, and not, but enough of it was clicking to suggest there was something that we were tapping into that could be successful. Not that it would be, but that could be. And then with the other experience that I described, I don't think there was anything sustained enough that we were seeing in the numbers or in the actual usage to say, wow, there's really something here. Now there were some kind of power users who were probably disappointed, and that's another, but I think that could be a false signal too, in a way.
Mm-hmm.
Um, so yeah, so I guess like with anything, it's great to have a role like survive and advance, but there's a lot of caveats, and it's really how you apply it, I guess, too.
I like that framing. Something should be going up and to the right. And
Mhm.
I'm assuming that's either revenue or customer/users. There's really
Yeah, some either certainly a commercial metric like revenue or profits, say, or but then if you have real profits and cash flow, you don't need to raise funding. But even proto commercial potentially, right? Like like users, even if they're not paying. Now, again, that can be a false signal. Ultimately, it could be that you're building a business that's not monetizable or whatever. But to me, that still suggests that if you're saying that and you believe there's a path to making money and to making a viable business and it's worth hanging in there. If you're not seeing any signal from the market that's positive, that's up and to the right, then it's really tough.
Mhm.
Yeah.
One of the first books you told me to read was Signal and the Noise.
Mm.
And is that the same signal you're looking for when you hear a bunch of noise? Is revenue, commercial numbers, profit, users? Like, for example, generative AI right now, how are you thinking about that and trying to separate and parse out the signal versus the
Yeah.
noise?
Yeah, that's a great question. It's really important. Um, it depends. It's very much context driven. So with generative AI, I think it's challenging because there's a lot of noise, whether or not it's signal, whether or not it is signals, I think still an open question. Particularly from a startup perspective. So it is clear that the the algorithms developed by OpenAI, by being developed by Alphabet and Microsoft and others, are going to be really compelling and have great impact on us in many ways. Hopefully, more positive than negative, but probably a combination. Um, and then so of course there's a frenzy of early capital into the startup community, to capitalize on that. But there's a lot of questions, I think, about how much value you can build on top of it if you don't actually own those algorithms. So I tend to be more probabilistic than absolute. I've heard absolute opinions on both sides that it's definitely not a place for startups, and then others who believe it's a very fertile area. I'm not sure which. I tend to think I see a lot of risk with it, but I think it's probably worth a few limited bets.
Mm-hmm.
So that's been my strategy around it. But yeah, it's very easy to get carried away about like this is the future, and I think in many ways it is. But then the next question is there really where do you create a franchise of your own? Particularly if what you're doing is tapping into the magic of those underlying, Midjourney or ChatGPT or Stable Diffusion. They're are you really adding enough value around it and on top of it to have a sustainable business? And the signal can be, even the revenue signals, I think, can be false in that context, because I've seen some startups that are very thin layers on top of those showing dramatic revenue growth. Still, I mean, small numbers, but fast growth. But it's hard to imagine that they're building something, at least in the current version, that is sustainable and defensible. So I think what we're seeing is this is a technology that is exploding in terms of people's attention and focus on it and discovery of it. And some people are discovering it through these, third-party apps, and they're capturing that. And can they turn that early discovery function into a real differentiation? I don't know. That remains to be seen. If I had a guess, I'd guess that a very, very small percentage of them will, and most won't.
But to the other lesson, it's important to have a thing. So even if it's maybe not sustainable in its current form, the fact that they're building AI, they have a team, it's important for
Yeah.
success.
Yeah, exactly. I mean, they're in the conversation now.
Yeah, exactly.
And so they passed that hurdle, and now can they like create value around that, and on top of that, is the big question. But yeah, exactly. They do have a thing.
With the our background, you and I first started working together when we were trying to figure out the virtual reality, augmented reality market.
Mhm.
And you're, can you maybe think through, because you didn't want to jump in heads first, which it sounds like you don't want to jump into generative AI heads first, you don't want to jump into crypto, anything new you should be cautious of. Can you walk through
Mhm.
how you were thinking about the VR AR market in 2015 when we started meeting each other, and kind of how that evolved over time as you got more or less excited?
Sure. So I think, around that time, there was some interesting early signal again of things like, the Snap um, AR glasses and so forth that were starting to, and even the AR, the lenses and some of the other things that platform was doing was starting to get pretty interesting consumer traction. And so that I think opened the door to believing that there could be a movement here. There could be some renewed consumer interest and utility and certainly business use cases around these technologies. Um, you had you had the Oculus acquisition happening, I think, a few years before, and so it was a combination of some of the funding slash M&A activity plus some real consumer signal that I think had us leaning in and looking hard at what people were doing and where there might be a market. And so we tried, I think, to find models that worked in previous generations of platform shifts in the early platform days, and we tried to find that in the AR, VR, mixed reality context as well. And so sometimes that was picks and shovels kinds of companies. Sometimes it was how do you solve what are the early from a consumer perspective, what are the early challenges the consumers are facing, and is there a way to solve that readily and in a way that basically creates an inflection point for the market. And so I think that was kind of what we were looking for. I'm hoping that what we were seeing was in fact signal.
Mm-hmm.
And I think the way it played out was that it was hard for that market to get beyond, other than a couple of isolated applications that were um, really easy to use, fun, and novel. It was hard for there to be a sustained consumer. There was, and then we also had, I'm sorry, we had some very highly vertical business use cases, but it was hard to find like broader consumer use cases that were sustainable. And so that early signal didn't really, those early sparks remain sparks. They didn't really start a forest fire or a fire we hope for.
I was looking at one of our old decks recently, and one of the slides in there, we're talking about how Airbnb is gonna install a camera into their app. So when you walk into the
Mhm.
house, you know where the fire extinguisher is all through
Right.
inside AR navigation. Uh,
Yep.
there was another slide in there about IKEA, selling 3D furniture. There was a slide in there about virtual try-ons of clothing and augmented reality. And we had
Yeah.
this beautiful, like we painted an amazing canvas, but to your point, none of that exists in a consumer
Yeah.
scale now.
Yeah. So,
So it's just talk.
ask yourself why. Um, and I think it's hard to know. I mean, you can only look in hindsight, right? Because at the time it did seem like that seemed very plausible that say at least two out of three of those would happen.
Mhm.
Um, and I think, and then I wonder about things like, Pinterest has and I think even Google has a visual search where you can, invoke the camera and it'll find you the similar things. And I wonder how often that's used. Is there has there been a major shift of consumer behavior away, towards that? Or is it just like, 10% of the activity or some small percentage, and it just continues in its steady state at that? Or has it declined? Is it something where people try as a novelty and then they never don't go back to it? I don't know. But I'd be curious. I don't know if that information exists. But I think, there's a value equation for consumers, in particular businesses too, but for consumers, and anything that's new, anything that adds cognitive load, anything that, is, you have to cross that value equation. And it's really hard to tell in advance what will and what won't, and so um, it's less about, I guess there are some people that are really, really, really good at that, but I don't, I think for all of us, we're just trying to guess. And if you get it right, it's fantastic. But it's just hard to get it. It's just hard to know.
And the bar is so high with technology nowadays that, if you showed me a camera that I could take a picture of something and it would find it on the internet in 1990s, that would blow
Right.
my mind. But if you show it to me today, I look at that and say, well, look, I'll just type an extra 4 words and I know how to use the
Yeah.
query. So I'll find what I need. That's not that useful to me.
Yeah.
So
Yeah.
it's,
That's true. Yeah. Sometimes it's more from the consumer's perspective, it's more incremental than it is, it really changes their life. And so, yeah, it's just hard to, it's hard to know.
yeah. Yeah. I was talking with Greg Castle yesterday for an episode we recorded, and we were talking
Mhm.
about PC nowadays with smartphones and PCs. The bar is so high for a new piece of hardware. Whereas
Mm.
back in the day, if you gave me a computer, I was comparing it to a newspaper. So basically anything it did at any speed
Right.
was
Right.
fantastic for me.
Hmm.
So it's interesting to think from the consumer's
It
perspective.
is. It is. Yeah.
So you're full time, pretty much angel investing at this point. You've been doing that for 15 years,
Say about 12 years.
12 years. So you're good at
Mhm.
it. You're ranked in certain list, which is great. Um,
Mm.
how do you think about money in general? So you went from being an attorney, you took a company public, and presumably had a good exit there. You started Flickster as first advisor, investor, made some money there, and then you also sold Adify for some money. So how do you think about money, both in preservation and in just what is it to you?
Yeah, it's a great question. So, I mean, I think, money buys opportunity. It buys, to some extent, freedom. Um, and the way I think about angel investing and money is that I have a certain amount of money that I have set aside to make angel investments. And, I tried obviously to maximize the return on that. Um, it's the it's I'm a very early stage investor, so the failure rate is relatively high. And then of course when there's a success, it tends to be a fair amount of time before that's realized. When it is realized, it's a large, kind of scale success. So it's definitely a hits driven kind of business. Um, and I think it's, there's a certain element of portfolio management involved, which is to try to not get too concentrated in any, in any given sector, like we were saying, whether it's crypto or generative AI. I think there's interesting things happening. How do you make bets? Um, and so much of early stage comes down to the founder and the founding team we were talking about earlier. That a lot of what I've done, I think, has really been honed towards trying to get a feel for that, and their ability to pick the market, and then to be agile in terms of pivoting to where the product market fit is. So I view that as risk capital. I write the checks with the expectation that I may not ever see that money again. And then I enjoy working with, usually at any given time, maybe 2 or 3 of the companies that I invest in. Working with those founders pretty closely to see if we can get to then kind of the next level.
And that
So
comes
that's
from your love for early product, which you maybe developed at Flycast.
product or go to market or storytelling around the fundraising or whatever way I can help. Sometimes hiring and a little bit of early growth hacking. Yeah, I don't necessarily do that, but I can help kind of create a framework and thinking about it. But yeah, I enjoy that a lot. And so I do that. And I feel like, I think, time will tell if it has a positive impact in terms of the financial outcomes, but I like to do it.
Mm-hmm.
Yeah.
But you've had some great exits over the last 12 years as an angel, like Udemy.
Yeah. Yeah. I've been fortunate to work with some really good founders, and then usually the deals that I invest in now tend to come from those founders. Either they're doing something, a second venture, or friends or people in their network are working on something, and that's really where I get most of the deal flow that I look at.
The other thing that you are good at bringing value for early on, which I saw, one of the companies we invested in was Wave Sports, and they're doing great now. They launched the Kelsey Brothers podcast. But you really did a great job early on of kind of acting as the quasi chairman of the board for the first few years and having the hard conversations with them and just making sure that the company survived and advanced to a point that it could start to flourish.
Well, thank you. I appreciate that. Yeah, I try to work with founders and reflect back reality where I can, because it's so hard when you're a founder. You have to be all in. You have to believe. You have to be passionate. And you have to, really, and it's very hard to be that and also maintain, like a perspective. And so I try to do that and add that kind of rigor, I think, to the process. And I'm not always the most popular voice in the room, I guess, because of that. But I think it helps at key moments.
Track record speaks for itself. And yeah, track record speaks for itself there.
But thank you.
So with you have your risk capital set aside. We've talked a little bit about, what are the other things you do with your capital. So wealth preservation, you're funding and putting money into ETFs routinely. I know you have, some kind of long arm real estate. How else do you manage your capital?
Yeah, so I try, the principle I like is Warren Buffett's circle of competence. And so I try not to be in a position to make investment decisions where I have no edge. I have no real deep understanding about the dynamics. And because to me, that's wagering. That's not investing. And wagering's fine if you want to wager some of your money, but so I really rely on, I do kind of high level and thinking about the asset allocation, and then I try to find great managers or great strategies that are low cost and tried and true, I'd say, for managing the rest of it, and not trying to get too fancy. I think there's something about the human mind that at times really thinks that complexity will lead to, higher returns or better outcomes. And then being a tax lawyer, I did a lot of structuring of deals and structured finance products and so forth. And so you can get those things can become extremely complicated with, documents that are hundreds of pages. And so I sort of know that world, but I tend to be pretty much plain vanilla. And it's really allowing time to do the work, as always. And I think also managing the downside. What can go wrong? What are the risks? How do you manage those risks? And how will you feel if there's a drawdown? Something's down 25%. Do you feel good enough about it to hold it and see it through? And so I tend to that drives me towards things that are either pretty conventional or the occasional high conviction thing.
I knew you were going to say that. That was one of the lessons I wrote down. I wanted to make sure we cover, is you always
Which
talk
is that?
about your best money managers protect the downside first and foremost.
Yeah. Mm-hmm. And let time kind of and just take care of the upside, really.
Mm-hmm.
Yeah.
Yeah, I think another point you touched on there about the human mind optimizing maybe for too much complexity.
Mm-hmm.
That's probably one of the biggest lessons I've been trying to have discipline around over the last year, is
Yeah.
oversimplifying. So almost everything I'm doing, I'm trying to make it feel as if it's not enough, and just go through the process of getting to, version 0001. And I think that also goes back to your first lesson, which is that it's always more important to have a thing, and they're really one and the same. I start to
Yeah.
feel like, at least.
Mm-hmm. Yeah. Oh, when you're in building mode.
Yeah, or
Yeah.
just being able to, yeah, I guess that's probably specifically within building mode, but yeah, having the simplest possible first version of
Mm-hmm.
your idea is probably one of the most overlooked necessary
Yes.
things for success.
Yes. Yeah. And the sooner the better.
Mm-hmm.
And and really the simpler the better.
Mm-hmm. Is that because that allows you to then go start selling it and putting it in market? Or why do you think that's, or is it because maybe you spend money in the wrong areas and now you can't backtrack that as easily?
Yeah, it's a combination. So it gets you to market faster, where you
Mm-hmm.
can start to get hopefully feedback faster. And then you can make adjustments more quickly and easily. If you have with complexities, if it isn't working, if the thing that you build is or trying isn't working, you're often not sure what component of it isn't working. And so you have a lot more of a much more complicated set of things you have to adjust or evaluate to change to start to see the metrics improve.
Mm-hmm.
The simpler it is, the more readily you can change things and evaluate the metrics. And I think, so there's that. It allows you to be more agile and nimble. And then I also think, look, founders fall in love typically with an idea, and they put all their passion and energy into getting that idea into reality, into getting it funded and getting something built and getting it out there. And I think there's a natural inclination, again, as a human, just human nature, to keep believing, even if the signal isn't there. Oh, if only we did this, or oh, if only the interface were a little bit better. Oh, if only this button were red instead of green. There's a million things you can do. And so I think it's what we've seen again and again is that the things that are really breakthrough or really great ideas, they work in a very primitive form. There's something about them that just, works even then. And again, there's something's going up and to the right. And so if that isn't happening, that should be telling you something. But people are humans being humans, and entrepreneurs being irrationally stubborn and focused and pushing things forward, which is needed. That's a hard thing to see. So again, I think that's a role where an investor or an advisor, somebody can kind of point that out and sort of like have that reality that's emerging be shown, you know. So
Also, with a founder perspective, your ego is so wrapped up in the business. Uh,
yeah.
you don't do a
Right.
good job of controlling that. It's tough to.
Well, yeah, and it's hard to control because I don't think anybody wants to invest in a founder where their ego isn't wrapped up in the business. You know, they're dispassionate to the point where it's,
Yeah.
you know, it's a day job. I mean, you know, yes, it's a double-edged sword. It's you know, it's why it's hard to see. But that's, I think, all of those I think are reasons why keeping it simple, keeping an MVP very, you know, very basic is so valuable. And you know, of course, it's, you know, typically less expensive to develop and all those things too. But I think more of it is just to try to get as clear a read as you possibly can. And if there's a core mechanic or a core benefit or value that you can express in that MVP, is it being, you know, or again, or you're seeing some real signal of engagement, you know, growth, traction. What is it, you know, what is it that you're looking for? And even if it's, you know, not all that you'd want, or you know, you don't have all the other pieces of it built. If you can prove that out, that's a good signal for moving forward, raising money.
All right, we'll end it there because I want to be conscious of your time. But just ending things on a metaverse note, I I've seen that issue many times. I was one who fell for that same issue where you're
Sure.
so caught up in the promise of where things could end up that you forget you can't get there without revenue and traction, and that's a hard thing to
And
over.
really, where's the market now? How do you meet people's needs right now or customers' needs right now?
Mhm.
And then, you know, go in that direction. And so, yeah, it's you know, it's really challenging. If you're too slow, you know, there's going to be a dozen, and you're an afterthought and probably won't survive. And if you're too ahead, it's really hard to have something that's going to show commercial, you know, any proto commercial or commercial traction in a way that gives you, your team, and your investors signal for continuing.
Yep. All right. As always, your wisdom is sage.
Yeah,
Thank you, sir.
great.
Thank you. All
Good
right.
talking to you, Don.
Wait, let me end the recording 1 sec, then we'll keep chatting.